Okay guys, it's Tuesday the 13th of February and I've just entered into a long position after this 7:45 AM pin bar on the FTSE. So pre-market, what I'm really looking for is for a retest of these previous highs right here and really a spike up toward this sloping resistance line. If I see that, that's where I will take profits, looking for around about 10 to 11 points. Now because it's pre-market, the spread was slightly wider, so the stops had to be made ever so slightly bigger. But that's really what I'm looking for. I'm looking for that spike up before I will take profits. Now, with it being pre-market also, we can tend to see relatively choppy price action when we come into the ATM open. I've had a couple of these recently with these videos. There's no real way to tell if the market is going to put in those spikes at the open, but as long as I've got a solid entry, I'm more than happy to be in the trade. Now, with yesterday's trading, first of all, I had two setups yesterday. I've basically been looking for the same thing yesterday and today, bullish bounces on this market because of these trend lines and because of the way the market is setting up. However, yesterday I took two entries and I came out of them at the break-even level. Now both of those trades then moved up to where the target was. However, yesterday I was being a little bit more cautious because they just weren't giving me enough evidence. But certainly coming in today with this one, I'm doing pretty much the same thing once again, and I'm looking for that bounce up around about 10 to 11 points. We'll see how we get on. That's all part of trading. So there's no real way to tell what each individual trade is going to do. You have to approach it as an individual trade. And yesterday with the two trades, I was a little bit more cautious. This one, I really need to see the spike up toward those previous highs before I would exit. But anyway, let's see how we get on with this one. Okay, so we're just coming into the open. There is every possibility this market will just spike down. As I've mentioned, when you are coming into the open of a market, it's a little bit more choppy and more difficult to read. So let's see how we get on anyway. If it just comes down and stops me out, I'm still happy with the setup and with the way I traded it. I'm still looking for the market to spike up toward these levels. If it doesn't at least reach here, I would then just take the full position loss. So what I'll do is I will likely just let this run because at ATM, it's likely that it's going to spike one way or the other. And then what I'll do is if it does start to take a little bit of time, I'll just cut the video down somewhat. Really what it's looking like is it's reacting off a bit of a trend line pre-market right here. You see the test, the test, the test. However, it's pre-market, it's not significant, so it's not something I'm really looking at as a major filter. So I'm happy to still be in this trade. We're starting to press up. Let's see if we can get to those 8 points. Okay, so we are now out of the trade. It is 8:01 AM. Now what I'm going to do is I'm going to pause this video. I'll come back and do the analysis afterward. Because it's so early, my girlfriend is just about to leave for work and I want to say goodbye. Okay guys, so the trade has completed and the girlfriend has shipped off to work. So what we can see is we actually spiked up a lot further than where I took profits, but then it has came back down, closed underneath the trend line, and then came all the way back down to the 7177 zone. So I'm happy with the trade. I used the trend line as the area to get out for the profit. Now this level here has been quite strong support. Basically, as we came into this week, as soon as we broke up above this whole section right here, what I was looking for was buy positions. At least short term, I was expecting the FTSE to make a bit of a bounce. Now yesterday, I took this one at 11:45 and then this one right here at 3:30. Now what you can see is the market pressed higher. This one here, the market spiked all the way up to here, but on both of those trades I was taken out at break even because I was being a little bit more cautious. The reason was previous swing point right here, I was wanting to be a little bit careful as this spiked up, and when it came back down to break even I just got out. On this one here, my profit target was a little bit higher up at these levels. It came all the way up, and then as we came into the close, the market started to break back down, and again I came out at break even. Now it's easy to get frustrated when this starts to happen, especially because last week was such a good week. it's really important that you just continue following your trading plan. Trading's pretty unique in that you can have a full day at work and make no money. Even worse, you can have a full day at work and then you can lose money. It's pretty unique in that regard, and it takes a little bit of getting used to. Today with this setup, it is a probabilities business. We do a lot of analysis to try and pick out the highest probability setups, but there's every possibility this could have, especially after this candle here and at the ATM open, it could have just spiked down and taken me out for a loss. And then what happens is, you've been very cautious yesterday when both of those trades would have worked out. You come into this morning and you've had a loss, and then your mind starts to chirp in, starts to try and make you take poor trades, make you make mistakes. It's really important that you just follow your trading plan. So let's have a look again today. So £351 on the day, not too bad. I'm hoping for another couple of pretty good trades this week. We'll see how we get on, but yeah, finished by 8:01 a.m. Really nice trade. As I said yesterday to the subscribers, I really like when you get a nice early morning finish. And I was looking for one yesterday morning. We did actually get a nice bounce from here, but it just didn't make sense for me to get into the trade. So yeah, really nice trade. What I'm going to do is move on to the daily time frame. I'll just let you have a look. In fact, probably it's better to do it on the 5-minute time frame because you can see it a little bit better. What I'll do is I'll pause the video, I'll scroll out, and then we can have a look at the trend channels that were one of the bases for taking profits and also one of the bases for getting a little bit more bullish on this market coming into this week. Okay, so we have zoomed out on the 5-minute time frame now. We've got these trend channels plotted in. What you can see is from 29th of January, testing at the lower bands. I've actually got 3. This one is the key upper one. For me, this is the key lower one, and then we started to have lower tests, so I put in the third support and resistance trend line right here. We then break down, we test at that one, we come back up, we test at the more significant one, we have another really strong move down, we then come back up, and then coming into this week we were up above this bottom sloping support line. After we break up above, we then start to break up above this one coming into Monday morning, and this is giving me the clue that potentially the market is now turning a little bit more bullish, at least in the short term. And I was expecting moves back up to at least test at the upper band of the trend channel. That's what we've seen yesterday. We've seen the market starting to press higher. I wasn't able to capitalize on it yesterday. That's all part of trading. And what's also part of trading is I wasn't able to capitalize on this yesterday, but other zone traders were. So some of the students that I talked to during the day had taken really good early morning trades and they were finished by 8:15. It comes down to your personal analysis and your personal risk assessment of the setup. Whereas I wasn't willing to take the trade, I was being a little bit more cautious. Some of them were, and it worked out very nicely for them. That's why it's really important as a trader. When people say, and this is how you trade, you cannot say to someone, as long as they're following the rules, you cannot take someone's interpretation of the market and say that's wrong. There's so many different ways to read the market. The whole point or the whole process of learning to trade should be about teaching someone, yes, how to trade the methods, but also how to understand the market. And yesterday, if anything, they understood the market a little bit better. Or not, they didn't understand the market better. They were more confident in the analysis. They were more confident in the setups. And so they were willing to give it a little bit more wiggle room, and they were able to capitalize on the profits. I wasn't able to do it. And then coming into this morning, it set up a little bit differently. I was more happy to get into the trade. That's all part of trading as well. So yeah, finished for the day on the charts. Nice early morning trade once again. And really, if you've been hearing the beeping in the background, I apologize. It's a chat window on the Decisive trading site. One of the best things, it sounds ridiculous, one of the best things is when I see other people who are able to capitalize and then make money off of these early morning trades because of the analysis, because of what we do at Decisive Trading. It's absolutely fantastic. I'm sure you'll remember. I'm sure you won't mind me saying his name, Craig Sanders. So he's done blog posts and stuff for Decisive Trading. You know, some months now he makes better profit than me. It's fantastic to see that development occur. It's fantastic to now be able to see him to read the markets and post up really good profits each month. It's an absolutely great feeling. People ask you, why do you teach people? That, you know, that's the reason. It's to help someone achieve something that they want to achieve is a great feeling. Even when he makes more profits than me on some months in percentage terms. That's another thing, actually. You're always going to get people who are going to try and kick you, try and kick dirt into your face, sand into your face, whatever you want to say. I remember when Craig posted up something on Twitter. I can't remember what it was. I think it was maybe his a sheet of his last few months' results. And I posted it up onto my Twitter. And I was like, really well done. You're making amazing progress. Keep it up. And some random person on Twitter commented saying, it's because he was still learning and still trading small position sizes. The person commented in saying, if he had, worked a paper round, he would have made more money. And that's the mentality of a lot of people in the world. They don't want to see you progressing. Now, I don't even comment to people like that. I just block them straight away. But what you need to understand is that is the correct way to do it. You build slowly. When you're starting to build, you start on a demo account. Then you start risking small amounts because you're learning. You don't want to suffer massive losses when you're trading with a huge account. It's just idiotic to do that because you are going to lose money. And then when you get to that point where you're seeing the consistency, then you start to up the risk. Then you've gone through your apprenticeship. Then you start to, compound, and then you start to make money. And, idiots that comment things like that, they don't understand that. All they think is you're trading straight away, you either make money or it's a complete and utter failure. It doesn't make sense. The market's random, all that usual crap. Anyway, so a little bit of a rant there at the end. I don't know why that popped into my head. I just wanted to touch on it. Anyway, so that's everything for today, guys. As always, I hope it was helpful. Hope you've all had a really good trading week. I'm James Orr, and thank you.